Welcome to Life Planned Differently with Rick Dwyer from Argolis Financial Group. In this podcast, we'll help you connect your personal expectations to your financial realities. Join us for this journey where we take a holistic approach to financial planning as Rick Dwyer draws from years of experience and guest experts to teach you how to avoid costly mistakes in your financial planning.
Tax time. It's not just a once-a-year event. It's something you should be aware of all year. Welcome back to the Life Planned Differently podcast. Your host, Rick Dwyer of Argolis Financial Group, works with contractors and subcontractors to maximize their profit. I'm Patrice Sikora. Well, taxes are not cut and dry. But Rick, why is tax planning so important to these business owners?
Hi, Patrice. Well, it's important because I want to give you kind of a visual for a second, and I want our listeners to think about this as well. Imagine you're a business owner and you have this boulder that you have to push up this hill. And as you're going up the hill, the boulder gets heavier and heavier and heavier. So the higher you get up the hill, it's not just that you have to work hard to push it up the hill, but the boulder actually gets bigger and heavier. How much do you think you would enjoy pushing that boulder up the hill?
Oh, no. It sounds like Sisyphus. I'd end up back at the bottom of the hill.
So that's effectively how our tax code works. In other words, the more you make, the higher your tax rates go. So that boulder gets bigger and bigger, the boulder being the tax burden gets bigger, the more money that you're making. And so for the business owner, they have to be very concerned with taxes because the more money they're making, if they don't plan properly, they could be paying a lot of extra money in taxes because that boulder is getting higher and higher up that hill.
So you're saying then that people, well, we know a lot of them probably just grab their numbers and give them to their CPA at tax time, but that's not the best tactic, huh?
No, because for most CPAs and enrolled agents, what they're really doing is recording history. They're taking the numbers that you gave them, that you generated throughout the year. They're putting them in the right boxes and checking off the right numbers of schedules that you need for your return. And then they give you back your information and file it with the IRS. And if you get a credit, you're going to get a refund. And if you underpaid, then you're going to have to pay some taxes along with it. And that's what happens. So that's really just a recording of history. That's not planning. And the other thing to keep in mind is that the tax code is very dynamic and changes do occur all the time, including within the year and change from year to year. Not that long ago, there was a credit for people who upgraded their heating and air conditioning to heat pumps. Well, their neighbors heard that they got the credit. So that following year, they went out and they got the heat pumps installed in their home. But during that year, the IRS changed the rules and it was no longer heat pumps. It was if you upgraded your doors and windows in the house. So they came in and they gave their accountants the paperwork with their receipts for their new HVAC system with a heat pump. And the accountant looked at them and said, well, that doesn't apply anymore. This year it's doors and windows. Do you have those receipts? And they said, no. And so they spent money on something that maybe was still good for them, but they didn't get the tax credit that they were expecting. And that's because the code changes all the time. The government uses the tax code to help influence how people behave to try and get them to take certain actions.
Rick, most advisors, do they understand taxes? Do they specialize in taxes?
So a lot of advisors I hear use a phrase that maybe a lot of people on this call have heard, and that phrase goes something like this: don't let the tax tail wag the dog. In other words, don't be too concerned with taxes. We have your whole portfolio to worry about. My suggestion is if you ever hear that come out of your advisor's mouth, that you should immediately pack your stuff up and look for another advisor because taxes can be the biggest drain on the building of wealth that you will ever face. And you definitely need to pay attention to taxes. So yeah, I think most most advisors don't pay enough attention to taxes. And, think about this. If you're in the 30% tax bracket and you have income that you're earning, you're earning it at 30%. Well, if there's a way to help eliminate how much you're paying at 30%, and you can do it legally and ethically and put it away for later and maybe get it out at a reduced tax rate, that would be far better than maximizing your taxes today.
So reducing taxes, I hear you saying this. How do you do this? Is it kosher? I mean, these are taxes you are owed. You owe these.
Yeah. So, one of the great things, everybody hears how complicated the tax code is. Well, one of the reasons it's so complicated is that the first chapter tells you all the reasons why you have to pay taxes. And then about the next 70,000 pages tell you all the different ways you don't have to pay taxes. So once again, as I said earlier, the tax code, very dynamic, changing all the time. So you just want to make sure that you're using strategies and techniques that are vetted, and the ones that we use are legal, they're ethical, they've been around for a very long time. In fact, one of them is just as simple as providing a retirement plan to your employees. Now, I've talked to a number of employers who are small business owners, and one of the things that comes out of their mouth is, well, I don't really feel like giving all my employees a free bonus. Well, depending upon the type of retirement plan you give, you're only going to be rewarding those employees who are actually contributing to their plan. And by doing that, you get to maximize your own benefits. So plan design can be done in a very strategic way, allowing you to optimize your contributions as the business owner, yet encourage your employees to contribute as well. And just for contributing a few dollars, it allows you to maximize your contributions.
Tell me a little bit more about that.
So one way that people can help reduce their tax liability is through retirement plans, by offering a retirement plan to their employees. Now, a lot of employers who I've talked to in the past have indicated that they're concerned about giving effectively a free gift to their employees. What they ought to keep in mind is that having a retirement plan where you're helping your employees prepare for retirement can also help build a sense of connectivity and loyalty to the business. But putting that aside, it's also a phenomenal benefit for the business owner. So one way of doing that is where you do a plan that requires the employee to do a contribution, and you match their contribution up to a certain percentage. And if they don't contribute, you don't give any match. So that all comes down to plan design. But what you want to have is a plan that allows you as the business owner to maximize your contributions. And what you'll learn is that for a bit of money that you get to contribute to your employees and help your employees plan for retirement enables you to put a substantial amount away to benefit you and your family for your retirement.
In other words, you're saying you offer a 401k and you benefit.
You offer a 401k, you benefit, your employees benefit, and just as importantly, your tax bill benefits.
All right. Are there any other tools that people can use to minimize their taxes, business owners, contractors?
Yeah, there are a number. And one of them, I'm not going to get into all the legal terms and all the strategies that are out there, but one is effectively a legal tax avoidance trust. And by the way, it's not called that, but what winds up happening is you put certain assets into this trust, and then you're going to be able to use these assets, and the parties that you have named in the trust, maybe your spouse and children, can use it for their lifetimes as well. And when the last person assigned to that trust passes away, the balance goes to their favorite charity, maybe the Red Cross or whatever charity you want to leave it to. And that allows you to take advantage of a very substantial tax benefit that's in the code. They encourage it because it gets money over to to various charities to help support people within our country.
And what are some other additional things that business owners can think about, perhaps in corporate structure?
Yeah, so corporate structure can be a big one. So let's say you're a contractor. Most contractors are set up as S corps, and as an S corporation, all of the income that you generate is going to pass through to you individually. So you're going to do a corporate return, and then any profits generated will then flow through to your personal income tax return, and it'll show up on there. So one thing that may make sense is that you actually want to take a look at your corporate structure and see if there's ways that you can divide your operations into separate entities. And maybe some can be deemed as C Corps while others are S Corps. And what we want to do is see if there's a way to take advantage of the benefits of a C Corp, because some income is actually sheltered from tax up to a certain dollar amount. We want to see if we can make that work for you as well. In addition, let's say that you're a veterinarian, or maybe you're a plumber or an HVAC contractor, maybe you're an electrician, and you've learned a lot of things being in business for the number of years, and you think that this is knowledge that you could pass on to others. Well, in that case, maybe what you should do is set up a consulting company as a C Corp, and then your very first client is going to be your primary business. And so your primary business is going to be hiring your consulting firm to do consulting for you. But in addition, you could also take on other clients, which could not only serve as another revenue source for you for giving that knowledge, but would also help to shelter that income as well. The primary issue that I hear people say, well, I don't want to give the people in my area my secret sauce of what makes me so successful. Well, you can pick and choose the area. So let's say you're in the Northeast. Well, maybe you don't work with any other plumbers or electricians in the Northeast. Maybe you only work with them on the West Coast, or whatever way you want to divide it up so that you don't feel like you're competing with yourself in your own market. So you can set that up and have that working where you have your own consulting company as a C Corp, taking advantage of the tax benefits you could get from that, as well as potentially helping others and having another revenue stream coming into your business as well.
Is it difficult to set something like that up?
No, not at all. I mean, you just go ahead and file the corporate papers, and you're going to be teaching them things that you already know. So you're not going out there and having to take a class to learn how to teach someone how to do certain things within your field or your trade, because you do it every single day. You're just helping others get the knowledge that it may have taken you years, if not decades, to learn. And now you can pass that knowledge on. But you do want to do it in a way where you're not competing with yourself. But there are plenty of people who do that. And in fact, it gets to a point with some people where they actually leave their business to others to run, and they focus on the education side and helping others.
And now you wanted to mention something about the national debt.
Wow, what a number that is.
Yeah.
So for those of you that have not looked at our national debt in quite some time, it's a pretty staggering number as of today. And today is December 16th of 2020. That's when we're recording this particular podcast. And right now, the national debt stands at $27.4 trillion. That is a boatload of money. Mm-hmm. However, if you think that's a big number, what you ought to look at is an even bigger number called our unfunded liabilities. And they include things such as not only the national debt, but Social Security, Medicare, all of the federal pensions, all the things that we have obligations already outstanding for. When you total all of that up, that number is, as of today, December 16th, 2020, $156 trillion. Now, I know everybody hears a million and a billion and trillion thrown around a lot, and they all sound alike. So, Patrice, I'm going to play a little game with you, since we don't have our listeners being able to participate with us. But just to kind of put this in perspective, if you were to say spend $1 every second of every minute of every hour of every day, how long do you think it would take you to spend just $1 million?
Oh my, I
Okay,
don't know.
I'm going to take you off the hot seat here. Very few people ever even come remotely close to getting this right. But the actual answer is about 11 and a half days.
Wow, you're kidding.
No. So $1 a second per minute, per hour, every day, and you would spend $1 million in a little over 11 and a half days. I think it's 11.7 days.
Okay, now that's just a million.
That's a million.
Okay.
So do you want to kind of venture any kind of guess for $1 trillion?
Well, let's put it this way. It's more than 11 days.
It is way more. In fact, it is 31,200 years.
Oh.
So let's
Oh
put
my
that in
gosh.
perspective. 11 and a half days effectively for 1 million and 31,200 years for a trillion. So while a million, a billion, and a trillion, they rhyme and they sound similar, they are vastly different. And by the way, the reason I don't do a billion is because a billion would be 31.7 years or 31.2 years. And you just multiply that by 1,000, you get a trillion. And so I know a lot of people know that, so that's why I skip over the billion. But even that, if you consider $1 billion is 31.2 years, and a trillion is 31,000 years. That's how big a trillion is. It's enormous. It's huge. And that's for 1 trillion. We have $156 trillion in unfunded liabilities. Folks, taxes are going to be an issue. Now, when? I don't know. But if you think taxes are going down in the future, I think you need to check your math again.
Absolutely, because that's the only way the government gets the money to fund these liabilities.
Absolutely, Patrice. The government manufactures zero, nothing.
Right.
The only way they get money is through taxes.
And printing money, but we won't go there.
Well, whether it's taxes, levies, fines, whatever, the only way they can get money is by taking it from other people. And our job is to help our clients minimize what's being taken. Because I want you to keep this in mind. There are effectively two types of people in this world when it comes to taxes. We have the informed and the uninformed. The informed being those who are keenly aware of the impact taxes can have and take steps to mitigate those risks. And then we have the uninformed who just go along and pay whatever they're told to pay. It's the uninformed who pay the vast majority of taxes. And unwittingly, many of the people that we work with before they came to us were in the uninformed category because they didn't even know what they didn't know.
So what is the best way for a business owner to determine the best ways for them to deal with taxes?
So I think the very first thing we should do is have a tax review. Now, we have a full tax service here at our practice. We have a team of CPAs around the country. And what we'll do is we'll review your actual return and we'll run what we call a what if scenario. And what all that is, it's a report and it'll say, if you had done these things, you should have been able to save this amount of money on your taxes. And many times it's in not just the thousands, but the tens of thousands of dollars. So it's a substantial difference. And occasionally we find out, you know what? They did everything perfect. And that's a good feeling too. Wouldn't you like to find out that you knew that you were doing everything possible and the team you're working with is just doing a bang up job and there's nothing else you could have done because you are already doing the best? I think that would be a great feeling, don't you?
It would be a fantastic feeling. Now,
well, hold on, Patrice, but how about the other side? If I told you that you're wasting tens of thousands of dollars in taxes every year and you knew that, would you continue to do that? Or would you want to stop and put that money back in your pocket?
I would be embarrassed. I would definitely want that money back in my pocket.
Yeah, I don't think you'd be embarrassed because, once again, a lot of this comes down to what you don't know, you don't know. Our job is to come and take a look and see if there is anything that you could be doing and then point it out to you. And then if you continue to pay the taxes because you don't want to make any changes, well, then you might want to be embarrassed a little bit.
More than that, there's another word. I think it's called, well, never mind. So how can someone with questions reach you, Rick? Because, boy, you've brought up a lot of questions.
I think the best thing to do is just call us at our office and let's have a quick phone call and see if it makes sense to even do a review. Because you know what? Sometimes it doesn't even make sense to do a review. So our number is 904-800-7299 is the best way to reach us. You could also go to our website. It's Argallus, ARGALLUS.com. And you can click on there and submit a form or call us. But I would say very first thing, let's have a quick conversation, 15 minutes or less, see if it even makes sense to do a review.
All right. And he is Rick Dwyer of Argallus Financial Group. Subscribe to Rick's podcast, Life Plan Differently, and you will be notified when new episodes are ready. You can do that with the subscribe button on this page, and of course, we encourage you to share using the share button. I'm Patrice Sikora, and let's talk again later.
Thank you for listening to the Life Plan Differently podcast. Click the subscribe button below to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Argolis Financial Group, Inc. or Capital Management Services, Inc. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service providers with any questions you may have regarding your investment planning.